Hi, folks. My name is Girish, Bali, the host for Back to Basics. We are live on all the platforms that we can think of, hopefully. So today we're going to be talking about financial stuff and credit score and how it ruins and how it makes relationships, and what do we need to do to fix that, to make that happen to a better place, to a better track that you should be getting into. And today we're going to talk to Todd today. And Todd is a person that I spoke with a couple of weeks back, and we connected online. Amazing guy. You know, what did I say on the banner? And I'm going to read it out loud. How to simplify our relationships with credit and simplify steps for building, rebuild, and maintaining your credit score in history and in score, obviously. So today we're going to talk to Todd. And if you have any questions, guys, please do let me know. We are definitely live, and we're going to be interacting with Todd today. So Todd, how are you? And thanks for coming to Back to Basics.
Thanks for having me, Girish. It's great to be with you today, and look forward to our conversation.
Yeah, absolutely. Thank you again, Todd, for being on Back to Basics. But before we get into the detail of who you are, and what you don't do, and what you do, and what we're going to be talking about today, what does Back to Basic mean to you?
Back to Basics is about simplifying, to me. Decluttering our lives, financial lives, to make things simple. Money is can complicate our lives and make and bring stress to us. I'm all about making things easier, automating things, and just so we don't have to worry about that. We can kind of decide what is the most important thing in our lives.
Yeah, absolutely. Thank you again, Todd, for being here and supporting me on this small podcast that we have here, and try to simplify things as what we can and make it fun and educated for all the folks around us. You know, first of all, how bad is credit? I mean, it seems like it ruins or makes our lives, doesn't it?
It does. It can seem, for a lot of people, can feel like it's controlling their destiny. Like they are stuck with bad credit forever, which they feel will mean they can never move ahead. They can't buy a home, that they might not even be able to get the job that they want. The credit feels like it's in every part of our lives. And so it can feel like this, almost like a big brother just controlling every step. And yet the more we learn about it, the more empowered we become to realize we can make a lot of changes and get around or get through all that pretty quick.
Yeah. So Todd, thank you again for answering that question. But let me ask you this. I mean, the number of years that I've worked and the number of years I understand credit score, it seems like the more and more I know, the more and more less I know. Okay. So let me ask you this here. So when the credit score is good or bad, whatever the situations are, and guys, if you are online, please do message me on the private chat, and we'll try to answer as many questions as possible, because we want to make it interactive. We want to use and pick his brain about credit scores and financial stuff. So Todd, let me ask you this here. It's a domino effect, isn't it? Because you're going all the way from credit cards to car insurances, car purchasing, house buying, rentals, even a job. Getting a job also is part of a credit score. So I guess it makes you and breaks you. So we need people to understand that credit score is very important in our lives. So what are your thoughts on that part? I mean, I think you've kind of answered it, but what are your thoughts on that?
No, you're absolutely right. It has these far-reaching implications in our lives. If you apply for an apartment, quite often they'll say, look, if you don't have a 650 or higher, or 670 or higher credit score, don't even bother, because we're not going to approve you. A lot of people are surprised that credit scores play a role in the size of our monthly car insurance or homeowners insurance premium, or of course we know buying a car, buying a home. I'm not surprised, but since I've been in this profession since 2004, and every time I ask, how do you think we're doing as a nation credit-wise, everybody wants to say we're just dismal. We have terrible credit, and we're all struggling. The reality is that our average credit score is pretty good. 50% or so of consumers in the country have what is generally considered excellent credit. But that's that term, excellent credit, that is in and of itself very plastic. You can talk about what that means and debate about what that means, because there is no way to define it really.
Of course. And I want to thank you again, Todd, for that. I want to make sure that I'm clear to other people. It does not mean that you cannot get a job. It does not mean that you cannot get a house. It does not mean that you cannot get a car insurance. It does not mean that you cannot get a rental.
Right.
What it means is that your monthlies will be a little higher, because it's more risk taking, because if you have less credit score, as he has mentioned, less than 650 or 575, depending on whatever the institutions that we're going to be getting into, right? I just want to make sure that everyone's clear on that part.
No, I appreciate you saying that, because a lot of people lose hope. They get bad. They have a bad credit score. What's the point anymore? And I've literally spoken with people who have lost that hope and just kind of go off the deep end with their credit. Say, well, I might as well just go crazy with my credit at this point.
Yeah. So I just want to make sure that the credit score is good. The lifestyle is going to be good, because if you have a bad score, then obviously the monthly is going to be more, and then your monthly budget is going to be out of whack. So that is for sure.
Right.
Thank you again, Todd, for that. So let's say a person who has, let's say, a $10,000 credit limit, a credit card limit, okay, and they have used it, they're almost maxed it out, right? But what they're doing is they're paying the minimum, which is getting away from getting penalized to bring that credit score down. So what do you suggest to those type of people when they're going through that suffering, and when they're going in that wrestle cycle till they pay that off, because they are making their ends and meet, right, on their monthly budgeting?
Yeah, and that's a pretty common practice, unfortunately. I was one that when I was 21, 22, got my first credit card. I maxed it out in 36 hours. And so I was in credit card debt my entire 20s. I know what it's like to have a lot of credit card debt. The minimum payments, we can demonize credit card companies. Everybody wants to do that. The reality is they are offering a product that allows us to buy things that we couldn't otherwise buy, or maybe shouldn't, or really the best way to look at it is to buy something securely that we don't have to use cash with. And if we max out that card, it's not the credit card's fault. We want to, like I say, blame everybody else. That's one of the problems with our with a lot of credit, is that we try and push the blame elsewhere and don't acknowledge that. But living that minimum payment is set up so that you can continue to have that account open, make a minimum payment. It only brings your balance down by about 1%.
Right.
Total.
Right.
And if you never use the card again, you could make the minimum payment every month on time. You could still be in debt 15, 25 years from now, paying that off. And typically it will double, if not more, the amount of debt that you end up, the cost of that, whatever you purchased.
Yeah.
So, it does have an effect. That minimum payment, it's a cycle that we get trapped in that is really dangerous on our finances.
Yeah, it's a black hole that we're just getting right into it, and we just don't know how to get out of it. So I totally agree with that. What about the people who want to build their credit score? What do we need to do with that? Obviously, we talked about the bad stuff about it. Let's talk about the good stuff of how people can start to get a credit history that they want to build. People coming out of colleges, what do you suggest to do, parents to do? Do they give them a credit card right after they graduate college or graduate high school? So what are your thoughts on that?
Yeah, great question. What happens is a lot of times we think, okay, I got to build credit. Our parents might tell us, you got to build your credit. And so we apply for a major credit card with one of those national banks that we see the advertisements for. And we get declined. And that the decline letter says, sorry, we can't offer you a credit card because you do not have enough credit history. And it feels like a catch-22. How am I supposed to get a credit card if I don't have a credit history? And how am I supposed to get a credit history if I can get a credit card? The reality is we should be starting smaller, kind of local. Parents, instead of saying you got to get a credit card, offer to put your kids on your account, your credit card account, as an authorized user. They don't even have to use that card or even see it. And they will start to inherit some of your credit. It's really a kind of a one-way, one good feeling kind of way. Negative stuff doesn't end up on the authorized user account. It's just a way of slowly building their credit. We did that with our older kids, and they're 16, and by the time they were 18, 19, they had credit scores in the 700s and had never used credit. But we'd been teaching them about it. So start with an authorized user card. If that doesn't work, or if you don't have access to a family member then the next thing I usually recommend is start with a retail account. Brakes and tire stores, those are sometimes they have the in-house financing that has much lower eligibility requirements. And what I like about that is you get approved for $1,000 of tires or whatever. It's not like you're tempted now to go back and shop there every weekend. You're just going to pay it off, and
right.
they're higher interest, and so I do recommend paying that down as quickly as possible. But start there, maybe a secured credit card with a local credit union, or some banks have that, or there are even people who struggle to get approved for any kind of credit. Some places have what are called credit builder loans, which are they're not advertised because they are not money makers at all for any of the financial institutions offering them, but it's a chance to build your credit over the coming 6 to 12 months.
Yeah. So Todd, thank you again. And just to be clear, I think are we talking about checking accounts and savings account for a debit cards for kids so then they can start paying stuff?
Oh, no, good question.
Are we talking about the store cards like Macy's and JCPenney's and all the other stuff?
Store cards would be retail accounts. That would be one of those a little easier to get than a major credit card. Debit cards, checking accounts won't help build credit. They can, if you overdraft and don't repay that, and that goes to collections, actually can start in a negative direction your credit. But like I said, tire store, brake stores, a good place to start. Your local clothing store, whether it's a Kohl's or a Macy's or a Gap, tend to be a little easier to get. They're usually $300, $400, $500 limits, but I don't say just go buy it just because you want to build credit. If you're going to shop there anyway, make a purchase. And the great thing is you don't have to leave the store with a balance. Just go back to the customer service desk. Say, hey, I just opened this new account. I got a 15% discount. Yay. And I want to pay off my balance. And you pay off your balance. And now you've just made a purchase. You opened an account, made a purchase, paid it off to zero, and you're walking out the door having started to build your credit. And so I tell people, never walk out the door with a balance on your account.
Yeah, thank you again. And how young can you apply for this? Like the age of 18 or a little younger than that?
Used to be 18. In 2009, Congress passed the CARD Act, and that changed it to 21. If you're younger than 21, you have to either have a cosigner, or you have to prove that you have to show that you have significant or sufficient income to pay your debts. So it is possible to get it at 18, but most people under 21 are going to need a cosigner.
Yeah. So thank you again, Todd, for explaining that. I've asked too many questions about credit scores and how to build credit scores. Now, let me ask you this here. From a person who's graduating high school and getting into college, okay, now they're supposed to be applying for, let's say, loans for college loans, right? And they could be declined due to the parents' income or whatever the situation is, right? So whatever the situation is, I'm just giving a hypothetical situation. But if they don't have a credit history, how are they supposed to apply for a loan?
Well, the good news is that the federal student loans don't take into account credit history, your credit rating at all.
Okay.
So the government guaranteed loans that I usually recommend, if somebody is going to borrow money, start there first. And then yeah, if you start getting into private student loans, then they do start looking at your credit rating, or parent loans, plus loans to look at the parent's credit rating. And so there might be a need for a co-signer if you can't qualify for those federal student loans.
Yeah. So, someone just asked a question online, and I'm not really sure if this is going to be doable or not, but they are saying, can we use AI to build credit score and predict what it might go for a person based on of the person? So what are your thoughts on that?
Well, AI, I haven't seen that exactly, but there are tools you can use online. You can just look them up, credit card or credit score predictor or calculator, and you can go on and it'll some of these programs will say, here's what your credit score is now. You can sign up for them. They're usually free. Here's what your credit score is now, and you can actually say, I'm thinking about buying a home or a car, or using the credit card, and you put in the potential or the possible scenario, and it'll try and predict this is how it might look, how it might affect your credit score. So there are some programs online you can find, and they're all free. I would never recommend paying for any of those. That will give you an idea of how different scenarios can affect your credit score. AI, totally automatic. I'm not sure how that would work, or I haven't heard that exactly, but it's pretty close.
Yeah. So thank you again. I'm pretty sure that person must be a Gen Z who's asking this question. So thank you again. So let me ask you this from a Gen Z's point of view and how the future is looking. Do we care a lot about credit score, or do we channelize a different way to measure someone's credit history or whatever? So what are your thoughts?
Well, great question. Credit scores are changing, and they're evolving, and they have been over the last couple of years. Like I said, I've been doing this from 2004, and for 15 years, nothing changed. Everything was just the same. I mean, there were some new scores coming out, but very little change in those scores, just little tweaks. In 2019, Experian, one of the three major consumer reporting agencies or credit bureaus, introduced Boost, which will incorporate your utility payments, cell phone payments, subscription payments into your credit score. So it's not only credit cards and loans that now can help build your credit report. TransUnion and Equifax haven't introduced anything like that quite yet, but they did. All three credit bureaus, pretty much after being there was a lot of I shouldn't say force, but the CFPB, Consumer Financial Protection Bureau, really wanted them to start reporting these buy now, pay later apps like Klarna and others, where you can make a purchase at a store and you make one payment now and 3 equal monthly payments later. And those now are going to be reported to the credit bureaus and can start affecting score, which means you can start building your credit with a buy now, pay later app. Problem though is that because it makes it so easy to buy stuff, anytime you make it easier for consumers to buy things, we as a group, not individually, but as a group, we do buy a lot more things, and it actually gets us into trouble. And as of last fall, 1 in 3 buy now, pay later app users was already late on at least one payment, which means that's going to start hurting your credit score. Right. So please, if you use something like that, pay it on time every time. I just say don't even. I'm not a fan. I'm just not a fan of borrowing money, basically borrowing money to buy a pair of shoes or to buy cosmetics or whatever, or shirts, or it's not just clothing, anything at department stores. And this is men and women. It's not a gender thing, but why go in? It's like using a credit card to buy something at a at a restaurant, you're
Right.
buying a hamburger, you are literally taking out a loan for that hamburger. And if
Right.
you don't pay it back on in full, you're paying interest on a hamburger. And people,
Yeah.
we do it all the time. We see it all the time.
Thank you again, Todd, for explaining that. So I wanted to talk to my audience 1 second. So, there are credit cards which, does some advertisements saying that it's going to be 2% back and 3% back when it comes to restaurants or even gas or any other, product out there. Okay. And this is just one of the examples. Now, credit card is you're actually borrowing something from the bank, and that's what it is, right? And they are going to give you 2, 3, 4, 5% back according to their promotion. But think of it this way, just like what Todd said, is make sure you pay on time at the end of the month. Don't overdo it. If your budget is at 100, don't charge yourself for $200 because you're going to be in a rut for the third month or even the second month, depending on what your budgeting is every month. So please be mindful when you do that, even though that you're saving money on the transaction, which is 2, 3, 4, or 5% with that example. So Todd, thank you again. Um, when it comes to credit score, and I'm emphasizing this here now, is that people have paid off their credit cards, their car loans, and the only thing that they're working on is the mortgage, the car insurance, all the utility stuff, and whatever, right? Do you recommend, and I've seen people do this, do they recommend to close that credit card because then they're not using it no more because they have no more
Correct.
balance?
Yeah.
But with that situation, it's going to hurt their credit score, isn't it? So
It actually
what are your thoughts
can.
on that?
Yeah. It's going to be an individual decision. But closing in a credit card means you are getting rid of that amount of credit limit that's available to you. And that is a cushion that the credit scoring models depend on to be able to say, is this person going to be able to make payments on time in the future? By getting rid of that credit limit, it means you're closer to your balance is closer to your overall credit usage. Your usage is closer to your credit limits. And so it looks like you're closer to being maxed out. So maybe it just depends on where you're at. But if you close that account and it had a balance on it, or if you have carrying a balance on other things, it can lower your credit score. But, let's get back to basics. Are you living for a credit score, or is a credit score a tool for you? Don't live by your credit score. Too many people focus on that, think it's the most important thing in the world. If you already have your home loan and it's a fixed loan, and you're pretty good with your driving, don't worry so much about your credit score. Just make your payments on time. Get rid of those cards that are complicating things, or just leave them be. They'll probably close. A lot of times they'll just close after 2 or 3 years if you don't use them. But I'll also say, if you want, keep them open. You want to build your credit. If you're trying to rebuild your credit, make a purchase every 6 to 12 months that you're going to make anyway with that a card, and then pay it off that same day, and it'll just stay open for a while. But I do say, if it's charging you a fee, consider closing it. If you just can't say no, carrying that card around, consider closing it.
Yeah. So thank you again, Todd. And just guys, just understand this here. Let me give you an example. If you have, let's say, a $2,000 asset around all your credit cards, and everything is paid off. Let me repeat, everything is paid off. Just leave it active till the accounts get closed on their own. The reason why I say that is because that's your asset. People will think, bank accounts will think that, oh, he has $20,000 asset he's not using, so his credit score is gonna increase. And I think that is the trend, isn't it, Todd? I think that's the right example, right?
Yeah, that generally, the higher our credit score or credit limit is compared to our usage, the better our credit rating typically is. It's called the utilization rate. It's makes up 15 or 20 of the 132 total factors that go into our credit scores.
Yeah. So thank you again, Todd. And one last question, if you don't mind. And I know that I've asked this question in a different way about Gen Zs and Gen Ys and all the fun stuff. And you said that the credit score has not changed much since a long time now.
Yeah.
But the way we're going, we're getting into the metaverse and we're getting into the cryptos and whatever.
Mm-hmm.
How is that going to change the credit score thinking and thought process?
Well, I mean, a great question. I'm really excited to see what happens in the next 5-10 years. Credit, we got to remember this: the credit score, the whole purpose of the credit score is not to say that you're a good person, bad person. I think we get wrapped up in that too often. It's not meant for the consumer at all. It wasn't until 99 we could even see our own credit score.
That's
It's
right.
the tool for the lender to try and predict, is this consumer going to make, how likely are they to make their payments on time or to miss payments in the future? That's what they want to know. They don't know us from Adam. They just want to know, are you going to make your payments or not? So that's what the credit score is trying to predict. And it's based on past behavior. The best predictor of future behavior is past behavior. As we get into a little more crypto-based society, is that we start to head in that direction or continue heading that direction, which I think eventually we'll see a lot more of that. I don't know if we'll how that's, I'm not a crypto expert. I know you recently interviewed somebody who knows a lot more about it than I do, but crypto shows exactly what, it shows exactly what has happened and is proof of our behavior in the past. So there will be, I wouldn't be surprised if there will be a crypto-based credit score at some point. Maybe you and I can work on one of those offline.
We're still learning when it comes to crypto and how it's going to be designed and who's going to be transferring who and what. I think we're in a learning phase right now, but it was a question just to pinpoint your thought process on that.
There's so much data becoming available about our behavior that our credit rating is, a couple of years ago, China had a social credit score. And I don't think we'll ever stand for that in this country. We shouldn't. But the idea that it's going to expand far beyond just what what the payments that we've been making on credit and loans, it's already happening.
So thank you again, Todd. And I know I did say last question, but I have one more question if you don't mind.
No problem.
And I know that people will ask this question in time. And I want to make sure that we do our diligence between you and me to give as much information as we can. Getting a report on credit report will hurt us, doesn't it? What I mean by that is that I think the institutions allow you at least once a year to get that report. Now, if we get 3-4 times, is that going to hurt us?
If you're pulling your own credit report, it's never going to hurt. It's not going to hurt your credit score.
Okay.
And through annualcreditreport.com, that's the only federally authorized site to get your free credit report. It doesn't come with a score, but your credit report is the law back in 2003 said we can get one every 12 months from each of the three main, actually from all consumer reporting agencies. But this site helps. We can get it from those three: Equifax, Experian, TransUnion. At the beginning of COVID, those credit reporting agencies said, we're going to let you do this once a week. Has no effect. It will never have and hasn't had and will never have effect on your credit rating to be able to see your own credit score. If you apply for a loan, that can have a small negative effect. If your brother-in-law or sister-in-law who worked for a bank pulls your credit score or your credit report, that might, depending on how they pull it, one, first be illegal, but two, it might have a negative effect. But if you're pulling your own, you do it. Go to annualcreditreport.com. You can pull them every week right now through the end of 2022, and who knows beyond. They might say, let's just continue doing this.
So we're actually talking about the institutes who pulled a credit score for, let's say, for your house, for your car, or anything else.
Yes, that does.
So those are the people that I'm talking about will hurt. But what you're talking about is you yourself and I are pulling that credit report every time, once a year, twice a year, whatever it is. It's not going to hurt you because that's your report.
You're right. Both on both accounts. You're exactly right.
Yeah. So thank you again, Todd, for explaining that, because that is a very common question that people,
Yeah,
they get really
it is.
freaked out that how many times can I pull this, or how many times can I run the report, which will hurt or break or anything like that. Todd, thank you again for being on the show. But before you leave today,
Yep.
can you briefly tell everyone what do you do, and what's your background, and how was your journey on Back to Basics? And do you have any last few words to all my viewers and my listeners on the show?
Sure. Yeah, I'm an accredited financial counselor with a nonprofit credit counseling agency, MoneyFit by DRS,
Hmm.
moneyfit.com, or excuse me, .org. And for the last almost 20 years, I've been teaching financial education courses online, in person, much less so since the pandemic. But it's been it's been an exciting thing. I mentioned I maxed out my credit card, my first credit card at age 21, 22.
Hmm.
And that's where my passion comes from, helping people avoid some of the mistakes that I've made. So
Hmm.
I wrote my first book in 2014, Everyday Money for Everyday People. And more recently, 50 Plus on Fire. It's an opportunity to get the word out, to help people learn from my mistakes or learn from other people's mistakes rather than they're having to make them on their own. But would love you find a lot of our free financial education things, financial programs online. They're at moneyfit.org. There's an academy there. And we're here to help as a nonprofit education organization.
Yeah. So thank you again, and how was your journey on Back to Basics? Any last quick words to all the people out there?
Back to basics, I would just say continue to simplify your finances, put them in perspective, where your budgeting comes in. It's got to be based on your own priorities. Same thing with your credit. Make sure it's helping you build what's most important to you in your life, so you can get rid of the excess.
Yeah. So thank you again, Todd, for being on the show and supporting us. And hopefully we'll meet each other again on Back to Basics, or we'll just meet offline and we'll chit chat and we'll talk about more credit score and more other stuff when it comes to your work. And I've seen your work, so thank you again for being who you are and what you do.
My pleasure.
So thank
Thank
you
you.
again, Todd.
It's my pleasure. Appreciate it.
Thank you. So, guys, we spoke with Todd today, and we talked about credit score. We talked a lot about credit score, and there was a lot of things I did not know. Well, there was a lot of things I did know, but then you know what? There's a lot of things that you did not know, and that's why we did this show. So, guys, as usual, as always, what do I always say at the end of the episode? Oh, wait a second. We do have a quote of the day from Back to Basics, and I think that's what we usually do before we end the call today. So here's a quote, and hopefully my guest will like the quote. Money, like emotions, is something you must control to keep your life on the right track. I think in different languages and different dialogues, we did say this today, didn't we? Credit score is one big thing which I keep on saying over and over again in this episode. But honestly, credit score can make you or it can break you. But please be on track. Please be mindful whenever you do any other transactions. Do double think. So as usual, as always, what do I always say at the end of the episode? Everything in life goes back to basics, and that's what we did today, guys. Guys, take care, God bless, and keep on commenting on all my episodes, including today, because it does help me in the long run. And try to understand from you guys what type of subjects and what type of topics do you like on this show. And there are three things, and including this episode and every episode makes it a hit for me, a really hit for me, which is the content, the guest, and definitely the host. Guys, take care, God bless, and I will see you next time on Back to Basics. Next week's episode on Back
we won't know it. We feel that we can cheat this data. We can't. That is a very dangerous and deadly thing to. I think we're on an inertia that believes that we're going to figure it out. No, sir. We're not going to figure it out. We will use a process to extract ourselves from a process that got us here. A very knowable process, knowable in great detail. We don't know how we got here, and we don't know how we're leaving.